Okay, so you understand exactly why keeping solid business records matters, right? Well, the next step is actually putting that into practice. And here is the best news. You absolutely do not need a complicated, stressful bookkeeping system to start. You don't need an accounting degree, and you definitely don't need heavy, expensive software. You really just need a simple expense tracking habit, one that you can actually maintain. Welcome to this Built to Thrive explainer.
Let's dive right into this core message because, honestly, it trips up so many early-stage small business owners. Most expense tracking problems don't actually come from having too little detail. No, they come from using a system that is just way too complicated to keep up with. You build a system so heavy that you just start avoiding it entirely. Your goal here isn't perfect textbook bookkeeping, not at all. Your goal is a usable system, one that clearly records expenses, securely stores receipts, and, most importantly, helps you actually understand where your money is going.
So we're going to walk through this using a really straightforward framework. First, we'll look at starting your practice. Second, keeping your categories simple. Third, building a monthly routine. Fourth, saving and matching receipts. Fifth, separating and reviewing. And finally, we'll define what good enough actually looks like. All right, let's jump into section 1. Next step, start practicing, moving from understanding to doing.
Taking that leap from just understanding the rules to actually doing the day-to-day work, yeah, it can feel pretty daunting, but I promise it really doesn't have to be. We're going to strip away all that friction with just 5 very practical steps. We're talking clear categories, a monthly routine, saving receipts, separating your spending, and reviewing your totals. Just focusing on these 5 specific things completely relieves the pressure of complex accounting. If you master these, your business will be on incredibly solid footing.
Moving right along to section 2. Keep your categories simple. And seriously, do not over-categorize. A huge mistake I see new owners make all the time is creating dozens of hyper-specific categories. All that does is create massive decision fatigue every single time you try to log a receipt. The crucial takeaway here is how beautifully short this list actually is. Start with just these simple ones: office and software, marketing, travel, professional fees, supplies, and your other common costs. Resist the urge to get overly fancy. The CRA doesn't need a separate category for your blue pens versus your printer paper. They really just want to see office supplies, used consistently year after year. Consistency is basically your best friend here.
Okay, on to section 3, build a monthly routine. It is time to stop waiting for year-end.
Look, expense tracking only turns into a nightmare when you leave the whole shebang until tax time in April. Handed monthly, it's actually incredibly simple. It breaks down into this totally manageable 20-minute monthly routine using 3 core habits. First, snap photos of your physical receipts immediately. Second, jot down the business purpose right on the receipt, like writing lunch with client X while it's still fresh in your mind, because trust me, you will forget. And third, download your PDF bank statements monthly. Remember, screenshots are not audit-proof. Doing this just once a month keeps the workload super light and stops those tiny mistakes from snowballing.
Which brings us to section 4, save and match receipts. Let's protect those tracked expenses.
So a tracked expense is really only useful if you can actually find the receipt for it later. If you ever face a CRA review, they aren't going to just take your word for it, right? They want the proof. And spoiler alert, a credit card statement alone isn't enough. You need the actual receipt showing what you bought and the taxes you paid. So save those receipts digitally right away and match them to specific transactions. Also, try adopting a consistent file naming method, like putting the year, month, day, followed by the vendor and the amount, like 2025-0412 _ Adobe _ subscription. Doing this prevents that awful pit of your stomach panic of missing records at year end. If you drop PDFs named like this into a cloud folder, your computer auto-sorts them chronologically. It takes literally 2 extra seconds, but oh man, it makes finding things a total breeze.
Now for section 5, separate and review. This is all about clarity and boundaries.
I'll let you in on a secret. The absolute simplest record-keeping habit you can adopt today, like right now, is separating your personal and business finances. As much as humanly possible, use a dedicated business bank account and a dedicated business credit card. When you start mixing your personal groceries with your business software on the exact same card, tracking expenses becomes infinitely harder. You're suddenly playing this awful guessing game, combing through every single line item. Separated finances give you clear boundaries and, almost instantly, completely clean records. And here's a great question to ask yourself when you're doing that 20-minute monthly routine. Do my monthly spending totals still make sense? You need to periodically review these totals to really see the big picture of where your money is going. If your software subscriptions are suddenly spiking or your marketing spend doesn't align with what you're bringing in, you want to catch that in week 4, not in month 12 when the year is already over.
Finally, Section 6, reaching good enough. Let's define what success actually means here.
So many business owners carry around this heavy guilt that they aren't doing enough with their numbers. Honestly, you can stop stressing over some unrealistic standard of perfection. Because this right here, this is your good enough moment. If your system hits these 4 things, every expense is recorded, categories are consistent, receipts are retrievable, and the totals make sense to you later, then guess what? Your system is working beautifully. You're doing a fantastic job. You do not need a perfectly color-coded accountant-level ledger. You just need these 4 pillars of clarity.
Now, to help you actually build these habits, Built to Thrive provides a free starter kit. And inside that kit are 2 specific downloads that act as the perfect natural companions to the steps we've just been talking about.
These tools are the Sole Proprietor Expense Categories Reference and the Sole Proprietor Expense Tracker. You'll want to use that categories reference to keep things simple. It literally outlines the standard business categories so you don't even have to think about inventing them. And then use the expense tracker spreadsheet to log your monthly routine, keep those totals highly visible, and totally avoid having to rebuild your entire business year from memory.
Now, just a quick reminder before we wrap things up. This explainer and the tools provided are strictly for educational purposes only. This is not legal, tax, or accounting advice. You should always consult with a designated professional for advice on your unique situation.
And that brings us to the end. Here's the big takeaway. Once your expenses are being tracked in a simple way, the next step is to build a monthly money routine. Because that routine, that's what helps you review what happened, catch any missing items early, and stop your records from piling up into a mountain of stress. This sets you up perfectly for our next practice explainer, where we'll dive into building that exact routine. So, until then, let me leave you with this. What would it feel like to have total peace of mind about your business finances by the end of this month? Keep it simple, stay consistent, and I will see you in the next explainer.